Hewlett Packer Enterprises reported their fourth quarter and full year 2023 earnings on November 20th. This analysis will look at the quarterly results, and we're using GAAP data for our comparisons. Year-over-year revenue was down 6.5% to $13.8 billion, but gross margins did improve to 21.6%. The company's share price was largely unchanged after the earnings release, putting market capitalization close to $16 billion. Operating income was $1 billion, improved by 37%, or about 7.3% of revenue. Pre-tax income was $852 million, up 32%, and net income was $974 million, up from a loss of $23 million in the year-over-year quarter. A tax benefit went in the company's favor, boosting the bottom line. Hewlett's printing business made up one-third of revenue to $4.4 billion, while their personal systems segment made up the other two-thirds at $9.4 billion. Year-over-year commercial personal systems revenue was down 11% to $6.2 billion, and the consumer PS business was softer by 1% to $3.2 billion. Hewlett Supplies division performed well, adding 3% to $2.8 billion. The commercial printing business was lower by 4% to $1.6 billion, and consumer segment performed the worst of all, down 21% to $533 million. The per share multiples of Hewlett were marginally improved by 5 million less shares outstanding. Earnings per share for this quarter were 97 cents. Sales per share were down by 6% to $13.80. Cash per share slightly improved by 3% to $3.22. Hewlett Packard has negative shareholder equity, so book value isn't meaningful. Annualized price earnings is only 4.07 compared to the S&P 500 at 25.17. The leverage ratios show that the debt ratio was worse to 0.25. Total assets declined as inventory and other current assets were lower. Debt to equity isn't meaningful as there isn't any shareholder equity. Interest coverage at 6.3 is still a good number, though interest expense increased faster than operating income. Liquidity ratio needs some improvement, with the current ratio below 1 to 0.73. The quick ratio at 0.31 and cash ratio at 0.13 could use a boost on the current asset side of the balance sheet. Return on assets at 10.53 shows assets are not being utilized as well as they could be. Cash flow data shines some positive light. Operating cash flow to $1.9 billion. Investing activities slowed down as the company integrates Poly into their business. Financing cash outflows were improved as the company didn't repurchase any shares. Free cash flow was strong at $3.2 billion. Hewlett paid a dividend of 26 cents, yielding 6.5% and growing at 5.5%. The company's enterprise value sits at $21.9 billion, which is a 1.6 multiple with respect to revenue and a 6.8 multiple with respect to free cash flow. Market cap to net income is 16.3 times. Guidance points to a profitable first quarter and full year, but with lower net than reported this quarter and the full year 2023. Key takeaways on the pro side: Hewlett Packard has a high dividend yield and low PE ratio and strong free cash flow. On the con side, return on assets are low. There is no shareholder equity, and both the PC and print markets are in decline. We give this company a neutral rating. Also, we have no exposure to this company, long or short.